So market structure, let's dive right into it. So first and foremost, why do we need market structure? We need market structure to understand what the trend of the market is, and the trend is your friend. So if the trend is bullish, you want to look for long opportunities. If the trend is bearish, you want to look for short opportunities, right? And I like to compare the trend of trading to surfing. Let's say you are a surfer. Is it easier to surf with the waves or against the waves? It's obviously easier to surf with the waves, and it's the same thing in trading. If you want to be profitable, you have to go with the trend. If you go against the trend, it will be very hard to become a profitable trader, right? And so the first type of market structure that we can have or trend is a bullish trend. And a bullish trend, I'll make it in green, and a bullish trend makes higher highs, higher lows, higher highs, higher lows, higher highs, right? So a bullish market consists of higher highs and higher lows. So higher highs and higher lows. And the highest point of the structure is always the higher high. Just like this. That's the higher high. That's the higher high. I'll make it in green. And then this structure here is the higher low. And you can find the higher low, wait a minute, by starting from the highest point of the higher high structure and going down, and you will look for the first sharp turn you see, just like this, and this becomes your higher low structure. Now the market can do multiple things. It can go down, up, as long as the market doesn't break the previous higher high or the previous higher low, it remains in a bullish context, right? But let's say the market decides to break the previous higher high, then this highest point here becomes the new higher high. It's like this. This becomes the new higher high. And then to find the higher low, same thing. Just go down like this, find the first sharp turn that you see, and this becomes your new higher low structure, just like this. Now the market can keep making newer higher highs and remain in the uptrend context, but let's say for now that the market decides to break the higher low structure. I'll make it now in red. So let's say now that the market decides to go up, down, and it breaks the previous higher low, right? So now this lowest point here becomes a lower low, and the market goes from bullish to bearish, right? So that's now the lower low. I'll make it in red also. And then this point then becomes the lower high in this downtrend context. It's the lower high. And to find the lower high, it's the same system as finding the higher low. Just go up like this, find the first sharp turn you see, and this becomes your new lower high. So a bearish market consists of lower lows and lower highs, right? Lower lows and lower highs. And a bearish market can also do multiple things. It can go up, down, as long as it doesn't break again the previous lower high or the lower low, it remains bearish. And once it breaks the lower low, the lowest point becomes the new lower low, and then this point here becomes the new lower high. And same as uptrend, it can keep making lower lows and remain in the downtrend, or it can change from a downtrend to an uptrend by breaking the lower high, just like this. And now this point here becomes the higher high again, and we went from bearish to bullish, higher high, and then this point is the higher low. And that's how you identify a bearish and a bullish market, right? And the last type of market that we can have is a sideways market. And a sideways market consists of equal highs and equal lows, meaning, I'll make it visual for you guys. So equal highs and equal lows, right? So if the market, so equal highs, equal lows, equal highs, equal lows, equal highs, equal lows. So if the market doesn't make any higher high or higher low structures, higher high or lower low structures, it means that the market is going sideways and is in a sideways market, right? So sideways market consists of equal highs and equal lows, right? So equal highs and equal lows. So and then this point here would become the equal high, and then this here becomes the equal low, right? And we never want to trade a sideways market. You want to stay away from sideways action. You only want to trade trends in the market to capitalize the trend, just like surfing with the waves, right? So let's look at the charts to give you an example from the chart itself. So is GBP USD a bullish or a bearish market, right? Good question. So in this point right here, it obviously made a higher high structure, right? It's higher high structure. So this point is the higher high. Then to find the higher low, start from the top here, find the first sharp turn you see, just like this, and then this point here becomes your higher low. So the market is in between the higher high and the higher low structure. So the GBP USD market is bullish at this moment. Let's take other market, for example. So the British pound, Canadian dollar. Is this market a bullish or a bearish market? Let's take a look. So this market went from making lower lows and lower highs to breaking all previous lower highs and going from bearish to bullish. And that goes like this. So this is the market. Let's have a look. So is this market bearish or bullish? So let's do the exercise. So here it made a lower low here. It made a lower low. This was the lower high before. And it broke the lower high, going from bearish to bullish. And then this point became the higher high. And this was the higher low. It stayed in between the context, and then it made a new higher high here, and then this was the higher high, and then this is the higher low, and then it actually broke the higher low in the bullish context, and it made a new lower low and a lower high, making this market a bearish market, right? So that's how you identify if a market is bullish or bearish. And keep in mind, we only want to trade with the trend, just like a surfer only goes with the waves and not against the waves.